There's two basic investments. One is cash flow. This is the hardest. It is the hardest to find because cash flow then affects return on investment. So if I put in $10 and I get $1 back, that's a 10% ROI. Okay, I mean, it's just simple. I mean, I was taught this as a kid playing Monopoly. You know, you get one house, you get $18. You get two houses, you get 36. I mean, it's not, you don't have to go to college. It is not that hard. Monopoly is a cash flow game, right? And that's it. If you can understand what we're saying to you is just fundamental of rich people. Poor people want to look rich, and rich people want to be rich.
It's all a word called cash flow. The people that got hammered were the people that were going for capital gains. That means you buy a stock at $1 and you're going to sell it at $2. You buy a house for $100,000, you're going to sell it for $200,000. That's capital gains. Now, if I buy a house, it's monopoly. I buy one greenhouse, I get $10. Two greenhouses, $20. Three greenhouses, $30, $4, $40, and Red Hotel, $60. I mean, you don't have to go to college to know that crap.
That is the difference between rich people and poor people.
The problem is that the people that you're seeing in the paper today, their philosophy is not based on this, period.
No.
It isn't.
But they've never, I mean, this is as simple as it gets. Technical, fundamental, cash flow versus capital gains. I mean, you know, if you play Monopoly, you'll understand this game. This is all there is. So when you look at Cash Flow 101, this is called fundamental. And this is called technical. And the reason it's technical because it's all emotion. What's your net worth, what's your equity, depends upon the emotions of that time. So I mean, these morons haven't got their lesson yet. They're going in to buy a foreclosure that was here to go on the same thing. One more time.
Well, yeah, and here's the ironic thing is that all these people that are losing everything, they're going to blame it on the real estate market.
Yeah.
They're not going to take ownership of the issue. They're going to blame it on the market.
And Kenny has owned multi-million dollar properties, but only after he was a rich man did he build a house. And what poor people do is they buy the big house on emotion, technical, and then they never buy on cash flow.
It's all a word called cash flow. The people that got hammered were the people that were going for capital gains. And the reason I say they're idiots, if you had gone to a regular school, they should teach you the difference between capital gains versus cash flow. And the people who are getting hammered in any market, I don't care if it's stocks, real estate, business, and all that, people are going for capital gains. That means you buy a stock at $1 and you're going to sell it at $2. You buy a house for $100,000, you're going to sell it for $200,000. That's capital gains. Now, if I buy a house, it's monopoly. I buy one greenhouse, I get $10. Two greenhouses, $20. Three greenhouses, $30, $4, $40, and Red Hotel, $60. I mean, you don't have to go to college to know that crap.
Kim and I live in a tiny little house on 16th Street here. We paid $117,000 for it. Monthly payments were $300 a month, including homeowners association who were ripping us off. But we sat there and we bought cash flow, and our little house just sat there and it sat there and it sat there with this dinky little house. One day we popped up and we had a lot of money. Then we bought a big house, the same as Kenny. If you can understand what we're saying to you is just fundamental of rich people. And poor people want the big house, the BMW, the nice cars and all this stuff, but they don't have the cash flow to support this. You know, so for Kim and I, our strategy wasn't to own one big house. Our strategy was to own 20 houses, then we live in a little house. And then we went to 500, then we bought a big house. That is the difference between rich people and poor people. Poor people want to look rich, and rich people want to be rich. We have no cash. I mean, we are so tapped out. The reason is because we're investing like wild people. We have a lot of assets, a lot of cash flow, but that money just keeps going back out. It doesn't stay with us.
It's that simple. You see, capital gains is a Ponzi scheme. You know, exactly as Rick Perry said. Social Security is a Ponzi scheme. Capital gains means you're hoping there's a bigger idiot than me. That's why I said they're all idiots. That somebody, you know, you paid $150,000 for a house and you're hoping somebody's going to pay you $300,000. You're hoping there's an idiot bigger than you sitting out there waiting to relieve you of your stupidity. So if you're going to be smart, don't play Ponzi schemes. Don't play winners and losers. Be a stand-up person. Give your renter a great house at a great price, well cared for. They take care of it. If they don't pay you, kick them out. All those other things, you know. It's about business. You know, with oil, it's cash flow. Every month, the check comes in. Show me my money every month. So I got richer. I get richer and richer every year. You know, last year we only had 2,700 houses. Now we have 3,500 houses. You know what I mean? It's not rocket science. You just keep adding assets, and every month those checks come in. I don't play winners and losers. I don't play speculation. I don't go to Vegas. You know, I'm not counting. You know, this is a CNBC. That's the biggest Ponzi scheme I've ever seen. Yeah, what do you put your money in today? You know, the stock market's going to go up. It's going to go down. I think I am Jesus or something. I don't put the market here.
Yeah,
I don't have a crystal ball. I don't wear a Swami's hat. I just want to give my tenant a good house at a good price, and they better take care of it or kick them out. That's it. Capital gains is like you have this goose that's laying the golden egg, and you eat the goose.
It's really quite simply the most important word for those of you in business or finance. No, the most important word is not income, expense, asset, liability. The most important word in the English language for the rich is a word called cash flow. You've got to know where the cash is flowing. So what a rich person is doing is controlling cash flow. So if money comes from an asset into your pocket, it's an asset. So very simply, when I was 9 years old, my rich dad said, assets put money in your pocket whether you work or not. Liabilities take money from your pocket. So the way you know you have an asset or a liability is very simply this. If let's say you're married with 3 kids and all this stuff, and you stop working, the money coming in is money from an asset, and the money going out is money from a liability. So if you happen to have a little house sitting over here, and it's sucking cash out of your pocket every month, it's a liability. And that's what I was saying. And I got hammered for that in the press. Today, with the subprime mess, you know, it's proven that millions and millions and millions of people who thought they were buying the asset, the American dream, were really buying a liability.
That's why so many people got hammered when the subprime came out. You know, they went into the poorest neighborhoods. Dreams of getting rich came to their heads. They've all become flippers. Flippers are capital gains Ponzi scheme. Social Security, Medicare, Ponzi scheme. The stock market is a Ponzi scheme. Real estate is a Ponzi scheme if you're playing capital gains. You're hoping for some idiot bigger than you to pay you a better price than you paid. That's what. Yes. It's very simple. You don't have to go to Harvard like Obama did to know that.